More now on a story we were telling you about just a moment ago. The Bank of Canada has cut its benchmark interest rate to 2.75% today. The 25 basis point reduction marks the 7th consecutive rate reduction by the central bank. The BOC says it's going to proceed carefully with any further reductions, warning of a possible new crisis that could be caused by the Trump administration's tariffs. Canada's key rate has now shrunk by 225 basis points in the last 9 months, making it one of the most aggressive central banks in the world. And joining us live with more of a housing perspective to all of this is Phil Soper, President and CEO of Royal LePage. Phil, it's good to see you. And thanks so much for joining us this afternoon.
My pleasure.
Look, there has been a lot of volatility in the markets. The numbers are certainly not looking good as this back and forth continues when it comes to this trade war. What do you think this rate cut is going to mean for the housing market? Obviously, the central bank had to do something to react here.
Well, structurally, I mean, financially, it's going to make homes more affordable. As a matter of fact, we've been through a period of 2.5 years now where home prices have been stable, or in, for example, the 416 in Ontario actually declined a bit. The cost of borrowing has gone down, and wages and salaries have increased. So it's not often, if you look back over the last 50 years, that housing actually gets more affordable in Canada and in Southern Ontario, but that's what's happening. But that's just structurally. Psychologically, obviously, as long as Trump continues to hammer his own citizens and businesses as well as ours, people are going to be on their heels and feeling the pressure, feeling the stress of the current environment.
Yeah, I mean, every day you wake up and it's something new. You just don't know what to expect when it comes to this administration and this trade war. Can I just ask you how buyers and sellers are feeling at this uncertain time?
Well, two things have happened. One, first-time buyers who are the ones that have the biggest difficulty getting into housing in our big, expensive cities have been moving. So we're seeing first-time buyers, they see condominiums on sale, they have been in a long time, and they're actually moving. Existing homeowners who say need to move, but they don't need to move urgently, are actually listing their homes. The number of homes listed in Canada, right across the country, has climbed considerably. But what they're not doing is the typical housing shortage in Canada approach of listing, selling, and then looking for a home, because the big challenge used to be, gosh, what if I sell my house and I can't find another one? Now they're waiting for their current house to sell before they commit to buying something, and it's created something of an impasse, a standoff in the market.
Yeah, I'm sure the tariff situation is really changing the housing landscape. Phil Soper, CEO of Royal LePage, always good to be with you and to get your insights. Thank you for your time.